This is Justin on Wednesday, December 14th, 2022. Take a look at SPX on the 3-minute, and I've got yesterday, Tuesday on the left, and in the thumbnail, I drew this arrow pointing at that candle, and I could do the same thing today with the candles at the same area here, but it didn't give, yesterday was the great 10 EMA setup going bearish. Today we just got right back into that same area, and then we put in a double top today before all the FOMC news told us to go down. Same location, same place we sold off from yesterday. Yeah, what a selling. You could have played this. You could have just gone bearish at the same location. The SPY did not have a bull candle here yesterday, and we did not get a 10 EMA setup today. So if that was all you were trading, then you were sitting in your hands and didn't take that. You could have taken something further down here. We did have some bull candles, even this one right here. You could have taken a breakdown below that candle. Stop would have had to been way up here, or maybe you took a chance with having a stop in the retest area. You know, like, could it retest up to the middle of this candle? It sure could. It did later, but maybe not all the way back up here. Some of the FOMC days, it does have a move back up. Other ones, it takes out the high and then takes out the low. You didn't know what to expect. So however you traded this, you were somewhat just taking a chance that, all right, where should we go based on what we know? And so I'm just looking at what we did yesterday. I'm going to look at the calls and puts of the SPY, the 405 call that expired today. So again, looking at this area, this candle at the 1042 time yesterday, we were almost back at that same level on the call. And I'm not saying you're doing anything with the call. You're just looking at this level to say, okay, well, could we retest back into that? And what I mentioned in the video yesterday is that even these retracements didn't come back up to this low that we put in all through here. And then look where we got to today. We came right back up to that same low around the 350 price of, of this move. We were looking at a different option yesterday, but it's relatively the same with these retracements not getting back up into this specific low, not a full-on retest, didn't retest that candle. It's the same kind of thing. Obviously, I can't look at yesterday's any option yesterday that expired yesterday and see what it did today because it had already expired. So I have to look at it in terms of what did another option do yesterday that maybe expired today. So that's the one we looked at just then. And then if we jump over to the 405 put, you can see the level was a little bit lower. The premium was a little bit sucked out a little bit more. So here's that same candle. So again, we're on a put, so it's flipped. So this candle, we actually made a low over here, which is on the other side of where, kind of this range of this, I was calling this kind of like an S curve. It was kind of like a cup sort of pattern, cup and handle that, just the way it looks here, but upside down cup in this case. But it made it up to the other side of the cup at this point. And this is, again, a great place that you could have been looking at what we did yesterday to see, okay, what happened here? And then how could I play that today, earlier in the day, and then play it again later, right into FOMC if you wanted to be into a trade at that point. What I also said here is if we take the 10 EMA setup, then you're in above that bear candle. And then you got to have a stop somewhere middle of this range, probably at least below the 10 here. You're looking at getting in at 6 and a stop about 4.5, maybe a little bit lower at 4. And that actually would have worked to get up to an R over here. And then maybe that would have been a 200 risk if you did this. So 1 R, $200 more is about 8. You would not have been able to do it with this option with a $100 risk. That's 2R that you would have been putting out there, the risk. But again, you can look at, all right, well, what did it do yesterday? Okay, we made it up to 7, made it up to 750. What if we get a push? What if we consolidate here and compress, and we get a push higher? Sure enough, we got up into 8. So even if you got in at 6 and you were looking for a target at 7 or 7.5, you could have done that. Risk to reward was not great, but you still could have done that as a setup, as a trade. Where do we go from here? We're right back in between the 100 and the 200. We have not been able to stay above the 200 in a while, since back in March. And even that, we rolled back down and we stayed below it from April all the way to end of November. So there's still a lot of bearishness. This downtrend is intact. I think there's more bearishness coming in. So we'll see how much. We'll see if we can press. It'd be great if we can just go sideways, because people are going to be kind of going a little bit a little more directional, and maybe it's not ready to. But I did, if you didn't see yesterday's video, go watch that, where I'm looking at the daily and I compare what we could be doing here to what we did do back up in here. And there are some significant similarities. And right now you've got the 200 as an extra level in here with some resistance. Whereas before you had the 200 still going up, and we played down into that. But ultimately we had a bigger S curve back down, from here, which was really kind of back up into the range of this. So there will be time if we do something else like this, break down, so let's say it's, it does something like this, whatever that retest looks like here, there'll be time between, where we're at now, which maybe we're back over here, and then maybe we'll do a retracement. I don't know. I'm just guessing about all this, but anyway, go watch that video. It was a little more succinct, and I think what I was trying to say, and drew this out a little bit more. But let's just take this day by day. We're right back into the thick of it, right in here with the 200 above, the 100 below. 100 is going flat. That means sideways. Both of the long-term moving averages are very sideways. I do like how we came right back into the 21 and basically just stopped right on the 21. If we start contending with the lows down in here around 39.30, that's where we bounced all these other times. Ever since, looks like November 18th, we have been bouncing off of that area pretty consistently. Something significant would have to happen to push through and get a close below the 100 to change that. So that is something to watch for. There should be some warning signs. So if we get a strong bear close below the 100, look out below. It'll look something like this candle back on September 13th, where we get a push lower. It'd be great if we can get a gap, a bearish gap, and go down, and we just push lower through the 100. Alternatively, if we get a gap up, if we trap all the bears from today and we gap up, we should see a strong candle kind of like this one. Actually, more so like this one. I think this would be a better candle from November 10th, because that would be a bullish gap and go with so much bearish that was in this day. And if we push right through the 200, so picture this candle up over here, let's say over here, and we get a push up like this, that would be significant, because just like this candle, we took out the previous pivot. That's what you'd be looking for this one to do. So if it even got even stronger here, a little bit higher, it doesn't necessarily have to gap up to do that. It could just be a candle that's going to just run. But what's the catalyst is going to be the question. If we gap, you're trapping more bears. If we just start to run, people have to be paying attention to whatever announcement, whatever thing is happening in the world, and trade it, feel like, oh, all the bears are trapped, they need to get out because this thing is happening in the world. It's a matter of what is that catalyst. So so that's the up scenario. What I just said was the down scenario, and then before that I said the sideways scenario. So up, down, or sideways, I guess we'll all have to wait and see. Hope this helps. This is Justin. Thanks.